Hi guys, welcome back to All Things Wholesome. This is a channel where we discuss all things that teaches about money skills. Today I'll be discussing 6 different asset classes that we have. As I've explained in my previous video that investing is wealth creation, as we all know that assets do create wealth. Alright, so let's get straight to the video. So the scenario is, let's say you are working and you don't have any debts to pay. You already saved up your emergency fund and you just have your budgeting in order. Your monthly expenses are taken care of, and after every month you have a lot of money that you don't know what to use it for because all the things are taken care of. So then you decide that you are going to start investing. So as you are doing your research, you come across your first asset class, and that is cash and near cash investments. So this type of investments are short term. This includes money markets and certificates of deposits, meaning your bank accounts, your savings accounts, the 30 days fixed notice accounts. These are all examples of the cash investments, and also your physical currency, the money that you have physically, it also falls under the cash investments. This type of investment is not risk-free, as we all know that banks can also default. So people think that if your money is in the bank, it is safe, it's 100% safe. There's no investment that is 100% safe, but it really happens that banks default. But I just wanted to put it out there that it's not that it's never gonna happen or it's impossible to happen. And also cash investments have the lowest investment returns out of all the asset classes. So then you decide that cash or near cash investments are not really for you. You are looking for something more serious to invest in. So then you come across shares or equities. You then decide to buy shares of a certain company. What this means is that you own parts of that company. This type of investment is risky because equity prices or stock prices are affected by market sentiments, and you can find that you buy a company and it's doing well, but then its share price just drops because of the markets. So because of the risk associated with this type of asset class, it means that it has the highest investment return, because the higher the risk, the more the return. So you can buy shares in the stock market, but here in South Africa we use the JSE Security Exchange. That's where you can buy or sell your shares. So I'm sure you must be wondering, how then do I make money in equities or shares? So companies do pay out dividends to shareholders. Depending on a company, the dividends are earned quarterly, half yearly or yearly. It really depends on the company. Or you can sell your shares on the stock markets. That is called capital gains, when you buy the shares at a certain price and you sell it higher than the price that you bought them. So in the scenario, you decide that you are going to buy some shares, but then you still have money left. So then you continue with your research and then you come across bonds. So what are bonds? The government and other big companies, sometimes when they want to raise money for projects, or maybe the government just wants to grow the economy and they don't have enough funds, they just lend money from the investors. So you, as an investor, you are giving your money to the government. You are lending them your money so that they can do whatever they want, and then the bond then sets out a certain date that, okay, in this date you're going to get your money back, and also it sets out the interest that you're going to get. So it's basically you lending them your money, you're getting it back plus interest, right? So then you decide that you just want to do more research on the bonds, and you just carry on with your research, and then you come across real estate. So you're like, okay, so what's real estate? So with real estate, this type of investment includes owning of land. So you own the property with everything that is permanently attached to the land, whether it was man-made or it was naturally there. So not only do you own the property, the physical property, but you get the legal rights or ownership to use, to control, to possess, and also to pass the property by means of a will. So with land, you can do a lot if you have land. So you can buy land and build apartments for residential purposes. You can buy old houses and flip them and sell them at a higher price. You can buy land and build a mall and let businesses rent there. That's commercial. There's a lot of things you can do with land, and this type of investment has also the highest investment return in the long run. With that said, then you decide, no, real estate needs a lot of money. I don't have that money now. So you decide that, okay, I'm just gonna wait on this asset class, and then you move along with your research. You come across commodities. Okay, with commodities, this type of investments includes investing in raw materials and primary agricultural products. These products are usually produced in larger quantities because they are inputs in the production of other goods and services. So commodity prices are determined by supply and demand interactions in the global market. As we all know that we need gold, silver, chrome, wheat. These are all types of commodities. How do you make money with commodities? It's either you can own the physical product, so meaning that you own gold or chrome, but that goes with additional fees where you have to consider transportation of that material, of that product, or storage, where are you going to store that thing, because it's in high demand. If someone just finds gold laying around, they might take it, obviously. So you just have to consider that when you want to own physically. You need tight security, you need good transportation, you need all that. And also you can buy equities of companies that produce these raw materials, like mining companies or companies that produce energies and all that. And also there's future contracts where you sign a contract that you're going to purchase a certain commodity. And then you decide that, okay, commodities are just too complicated for you. Then you end up with the last asset class, that is cryptocurrency. Here you just like myself, you have no clue what's happening. You try to research, but you don't understand because they talk about blockchains, and you just can't picture that in your mind. But then you know that examples of cryptocurrency, it's Bitcoin, it's Ethereum, it's Theta, it's all those coins that you buy and you hold. I'm not sure. I tried to research this, but I don't understand, so I'm just going to leave it to professionals. But you must just know that there's asset classes that deals with cryptocurrencies. So that's the end of my scenario. So it basically says, if you have a job and you're earning and you have saved up your emergency fund, you don't have any debts, you have a lot of money left that you don't know what to do, just research on investments and invest your money, because that's the only way you can create wealth. Savings are not for wealth creation, it's for your convenience. Thank you for allowing me in your space and lending me your ear. Always remember that I love you. Have a lovely, productive day. Bye.